Good afternoon, everyone, and welcome to our webcast, where large banking and financial services institutions are headed, how IT vendors can capture opportunity, highlighting the results from our recent Banking and Financial Services SourceIT study. My name is Allison Crawford, Senior Marketing Manager here at TBR, and I'll be your host for today's session. Technology Business Research's focus is to provide business research to accelerate our clients' success, and this webinar is a part of these ongoing efforts to find new ways to support you and your business, helping get the most out of your research investment. In TBR's new research program, SourceIT, we help our clients identify opportunity by highlighting the business and IT strategy drivers and demands in specific market segments, target IT purchasing decision makers by explaining purchasing scenarios, and identifying where in the business or IT organization decisions to purchase will be made. This insight will help clients understand how changing customer dynamics, technology, and business models are influencing financial services firms and how they are responding by investing in scaling out operations and business process improvements. Through this research, our goal is consistent: to provide actionable insight into the market and competitive strategies that translates into advantage for our clients. In the next 45 minutes, Senior Analyst Alan Kranz will delve into the trends driving the results featured in this recently released study, followed by Q&A of these trends and how they will affect you. But before I pass this over to Alan, there are a few logistics I'd like to cover. First, we're recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. We'll address them at the end of the presentation. Or you can request an inquiry call if you have additional questions. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. And I'll share all these social media links with you again at the end of the presentation. Now let me introduce Alan Kranz. Alan has been covering the software market, vendor performance in the software market for the last 8 years and is instrumental in the development and execution of SourceIT. His presentation today is a summary of the key points found in the full 100-plus page report, which double-clicks into workload categories to specific key workloads, key project case studies, and deeper buyer analysis. And with that, let me hand this over to Alan.
Great, thanks Allison, and thanks everybody for joining today. So today we'll cover highlights from our recent Banking and Financial Services SourceIT report. And what we've done with that report is conducted 225 surveys as well as 25 interviews to delve into the environment within which financial services firms are investing in IT, how that fits into their broader business priorities, and double-click into the workloads, solutions, and levels of investment that are involved with their overall IT strategy. So it's really to provide a baseline for the business environment within which they work, and then analyze how IT and which IT investments are being pulled in to support that overall initiative. So the study focuses on the larger size of customers within banking and financial services within North America. So we've used the two size categories, 1,000 to 999 and 10,000 plus. So it really does focus on the larger end of the segment. So just wanted to provide that baseline as we jump in. So when we look at the environment within which financial services is operating overall, it's one that we see as more connected to the overall economic environment than any of the other industries that we've looked at. So we've looked at a total of 5 industries with this SourceIT analysis. And within financial services, we found this very strong connection between the overall economic environment and not only their business performance, but also the IT imperatives that are involved with that. So it's very sensitive to changes in that. So that's kind of the first baseline for how these firms are using IT and the outside influences which can have an impact on that strategy. Secondly, we found, so with that as a baseline, both competitive and customer changes that are really driving these firms to change the levels of investment, as well as alter the workloads and priorities for how they're using IT. So a fairly complex space, a lot of which is rolled up in the quote which we have on this first slide, where this respondent is looking to reduce costs, improve efficiency, affect growth, and ultimately improve shareholder return on investments. The way that we can affect these things is by making our project teams more effective in what they do. So a tremendous amount of goals and initiatives rolled up into that quote, starting with efficiency, outcomes, customer perspective, and I think that's consistent with most of the conversations we've had in conducting this research, is that IT is really more of a component of their core value proposition in financial services than we found in other industries. So with that as a baseline, one of the things we've done in this analysis is to go out and, by looking at the individual budgets for the respondents, triangulating that to the overall market, look at the aggregate vendor opportunity here to provide a baseline for the ultimate consumers of these reports, which are the companies that are looking to sell in, provide the tools and services that enable the financial services firms to go out and use IT as a strategic part of their business. So in that exercise, we've identified a $55 billion opportunity in 2014 for the vendor addressable portion of the IT spend. And we'll get into a little bit more detail of that as we go through the report. So as we get started and deeper with today's conversation, the three areas that we want to look at, and it really reflects the core components of the SourceIT report itself, is to first start with the overall landscape, go deeper on that. And so what we've found there is that banks are planning increased investment, making bets on things that they see as doing two things: allowing them to maintain and continue to run their existing IT assets as it relates to that as part of their core business, whether it's internal or external, as well as place new bets on things that change the value that they're able to deliver to customers. As one of the respondents put it, it's run the bank versus change the bank. The second thing that we'll touch upon during today's webinar will be to look deeper at what those investments are and get below the covers for what does it mean for the run the bank versus the change the bank, and how does that translate into the different levels of investment within the overall IT spend. And then lastly, we'll look at some of the personas that we saw in terms of how they're evaluating IT, making decisions, who's involved with those, and then how that changes the priorities and the sales approach that's required to successfully address those requirements. So with that, let's get started and dive into the background for the environment within which these banks are working and how that translates into their IT investments. So starting with another quote, I won't read this entire quote due to its length, but there are a couple important things that come out as you read through and digest it. First, there's this focus on business models and looking at how these customers are really looking to IT in a way that ties into that. It's not necessarily a support component for the business model. A lot of times it actually enables the things that they see as differentiating themselves in the market. So it's a really tight integration between IT and the business, a little bit more so than we've seen in other industries. So that's the first important thing that we see reading through this quote. Second is this focus on delivery and the changing of traditional ways in which IT has been delivered. So although it's still industry steeped in a lot of legacy applications, legacy IT investments that are going to continue to be maintained as part of that focus on continuing to run the bank, we do see more aggressiveness in terms of evaluation of new delivery techniques So that's the second thing that I think is important for the understanding of the overall space. Thirdly, so when we look at the purchasing dynamics, there was this tendency to have a distributed aggressive purchasing persona within the space. So from a vendor perspective, one of the ways that we see being able to address that and take advantage of it is, as this respondent says, getting more aggressive, investing in proof of concept and pilot testing as a way to short-circuit some of the decision-making and really speed that time to the decision and the value for the bank from the ultimate IT investment. So it's a good baseline. I wanted to highlight that quote as we go into this section. So when we look at this baseline, after we've completed the research, we really saw throughout the discussions as well as in follow-ups after the fact just how important the economic conditions are for their plans in terms of both the business and the IT, so that external force, I think, is most prominent for the banking and financial services sector. However, we saw as a close second when we looked at feedback from the survey as well as some of the quotes that competition as well as the challenges of business growth are, again, another external factor that layered on top of the economic conditions is really tightening or increasing the importance for IT for these financial services firms. The quote down at the bottom really calls it out very well. So the top external factors are threats from non-traditional entrants to banking, citing Amex and PayPal as specifics here. Revenue pools also being challenged by regulatory mandates, and there's some specific mandates called out. So both a combination of competition as well as reacting to that in a way that complies with new regulatory mandates as well as ones that are ever present in the financial services sector really, I think, heighten the importance of IT, but also provide some sense of urgency for adopting new services for customers and continuing to evolve the way that IT ties into their overall business value. So when we look at translating those external forces into what the banks are seeing in terms of their environment, so we have seen revenue pressure as a result of both the overall economy as well as some citation that the compliance environment is limiting some of their flexibility from a business standpoint, causing internal pressure that they're forced to grapple with. Obviously, that has an impact on their ability to invest in IT and the types of solutions that are actually moved forward with and invested in. So the ways in which we see banks reacting are they're forced to balance and prioritize their investments between the run the bank versus change the bank. And we'll get a little bit deeper into the specific splits as we get into the budget allocations. But we do see that the run the bank continues to be a more sizable portion of the budget. And a lot of that just plays to not just banking. We saw it consistently across the industries that we've looked at. So not something necessarily unique, but certainly from the respondents that we spoke with, one of the dynamics that they're dealing with in terms of both overall budgeting growth as well as actually trying to get some of those funds that tie into new initiatives which help them grow and drive the business forward. So here we start to get below some of that overall environment and look at, for participants in the study, this is a split of what are their priorities. So it's a ranked priority, multi-select, and so we've rolled up the biggest categories and taken a look at, when you ask people, budget aside, what are the things that they want to be investing in, this is how it ranked out across the different categories that we were looking at. So I wanted to start with the quote on the top right because I think it sums up a lot of the statistics that you have in the pie chart on the left. We are in need to create user-friendly applications which allow our clients to take full advantage of our services. the mobile needs to simplify banking in order to encourage an easier and more direct interaction. So as we look at that, as it's reflected in the callouts to the left, you can see a majority of priorities are tied up in things like business applications, industry applications, BI and analytics, and that a lot of that spend is really focused on their customers enabling new services, as well as you note that direct interaction. So it's not direct in a sense that it's person to person, but they're seeing these IT services and tools as ways to tighten their relationship with end customers, improve their position in the overall market, and obviously translate into those bottom line results that we saw going into this. That is one of the many priorities that IT has in terms of the value it can deliver for these firms. So here, when we look at some of the different cuts within the data, obviously you see the two size of firms that we spoke with going left to right, with the larger firms on top, that smaller segment of customers on the bottom. A couple things to note as we look at their average budgets, the increases, and the proportion of these firms in the space that we covered. So we looked at there's about 1,000 firms in the large North American banking and financial services space, and it's about a 25-75 split between the large and the small firms. So a little bit larger proportion of that 10,000 plus category than other sectors. So overall, we're looking at a little bit higher weighting to larger firms within financial services compared with some of the other industries that we looked at, like retail and healthcare. The other thing to note is when you look at the size of their overall budget, almost a 3-to-1 ratio between the large firms and the small firms. So that translates into roughly equivalent or disproportionate majority of the spend is really driven by those larger firms after you take into account the average budget size. So that's kind of the landscape from the size perspective. When we looked at the growth, compared with some of the other industries, it's actually notable that both segments of the market are expected to grow in terms of their IT budget going forward into 2014. We didn't see that in every industry, so the fact that the large firms not only drive so much of that overall market opportunity, but are continuing to plan increased expenditures going forward is something that we see as notable and speaks to where the market opportunity is going to be going forward into 2014. So taking another step into the overall budget, so this aggregates it up into that overall market opportunity that we saw within this sector. So the way that we went about analyzing this and segmenting it as part of the research, we started with the overall IT spend. So that's the big bar on the left. And so that we found was about $74 billion in 2013. And then to highlight the analysis that we really found was addressable for IT vendors, actionable. We segmented out the overhead, the personnel that is largely an internal investment for them, not something that the IT vendors would be able to target as part of their value proposition in the space. So that's where we segmented it down to about $56 billion of addressable opportunity in 2013. So that covers the size perspective. So with the remaining slides, and you can see some of the highlights here, we wanted to segment that by what are the key priorities and solutions. So you can see a difference between the solution priorities, which are very customer-facing, very much tie closely into that business model differentiation, which we saw these firms looking to IT to provide. So things like the customer management, channel management, mobility, all things that are top of mind in terms of those solution priorities. We also covered from a more IT-centric perspective, what are the workloads that they see that are both driven off the solution perspective and required to support those, as well as overall efficiency factors that the IT department is looking as part of their overall, whether it's meeting new budget demands or improving the overall quality of IT. We saw things like business performance management, focus on information management, BI capabilities, as well as some of the more baseline capabilities around operating systems and applications delivery. So that covers the baseline for the overall size of the market, how it splits out across the big categories, as well as what the priorities are. So with the next section, we're going to dive deeper into some of the specifics in terms of how those overall budgets are allocated to the broad categories of run the bank versus change the bank, and what some of the changes that's going to occur in terms of how that those funds are actually laid out between 2013 and 2014. So when we look at the ongoing importance of maintaining those legacy assets, those run-the-bank investments, you can see that laid out in a lot of the spending categories that we have here. Now, in contrast to when we ask people to simply prioritize those things that they want to invest in, you'll notice for the actual expenditures, much more significant levels of investment and percentage investment going to things like professional services, infrastructure, systems management, nearly composing a majority of the actual spend. And we see those as things that really support and enable both the legacy investments in terms of those run-the-bank priorities, as well as requirements for supporting those new areas that they see as changing the bank, really enhancing the value proposition. A lot of investments still required on the back end in order to make that happen. So you see that laid out in the priorities in the pie chart to the left. The only thing that really does not show much change going forward is the productivity application space, largely an internal focused investment for them and not something that we saw as increasing going forward. And I think that's consistent with the focus on delivering enhanced value to end customers, increasing the efficiency of IT for cost savings, not as much focus on the internal constituents, and that's reflected in the flat budgeting for productivity. You can also see some of the overall size categories in terms of the fixed versus discretionary. So, majority still going to the fixed, although we do see more of an increase on the discretionary side. As you look at combining projects that change the value proposition as well as deliver increased efficiencies internally for the IT side. So here we have a more clear roadmap for the different categories, what the expected changes from 2013 to 2014 as we looked at our respondents' average budget. So a couple things to note, so it's reflected in the previous one, but you can really see in terms of the dollar increases, just how important those investments in infrastructure, professional services, both to maintain the legacy assets as well as provide that baseline and skills necessary to go forward with new investments, really being the largest drivers of the overall investment growth over that time period. So it just provides a very clear roadmap for where they were for 2013, where they expect to be for 2014, really increases across the board in all areas except for the productivity applications and the overhead. So reflecting the focus on increased efficiency as well as the increased levels of investment for outside spend categories laid out here. So that covers a lot of the component focus for how these firms are planning their investments, looking to increase them over the next year. With this slide, we're taking a look from a workload perspective at the different priorities in assigning project budgets for 2014, as well as the top-of-mind vendors within each of these spaces. So on the left-hand side, you have a lot of the business-driven initiatives, and you can see that as you lay them out in terms of that overall budget number, the mobile and online banking, although there's still a lot of capabilities that have been added for most of these firms, significant investment, nearly twice the other categories. So still a lot of budgetary dollars being planned for that space going forward. And as some of the quotes that we heard earlier echoed, but it's not only from an efficiency standpoint. They're really looking to these investments to tighten their ties to customers, provide more direct interaction. The expectation, obviously, on the customer side has changed tremendously over the past couple of years, where those mobile and online capabilities are critical in terms of catering to those expectations. And then on the right-hand side, a couple interesting things to note as you look at the sizes of the budgets between LOB and IT. So although the mobile and online banking is the largest business priority, you can see that on the IT side, those project dollars are significantly higher, more expensive and costly to get those implemented on the back end. So still, if you look at the priorities in terms of the applications, the infrastructure, we see that mix continuing to be skewed towards the IT side. Great opportunity for the IT vendors and the infrastructure providers to continue targeting financial services areas as one of their big revenue drivers and target verticals. So getting a little bit deeper into how decisions are made, how the budgets are prioritized, I'll read this quote because it's important. It really lays out the foundation for a lot of the analysis and is representative of a number of the feedback that we receive from respondents in this area. Decisions are separated from run the bank versus change the bank, with a new category for regulatory mandates that IT has to support across the bank. So it's really indicative of almost the main two, but also a third subcategory of IT spending and how that's laid out. So for most respondents, the run the bank, the compliance environment has been something that has been a huge part of their IT roadmap for a decade plus. So it's not a new category. It's really integrated into that maintaining legacy assets and investments that compose a majority of the budget. So we see compliance really rolled up in there and exhibited in terms of investments in things like backup and recovery and security. For those change the bank dollars, and I do think that 40% of the budget is a sizable amount of that investment. So we've seen these firms be successful to a large degree in terms of shifting that priority. So it's not a 70-30 anymore, it's a 60-40, and that the size of that increase when you look at $56 billion is very significant, both for the banks themselves with the progress that they've been able to make in terms of catering to customer demands around things like mobility, online banking, as well as internally make investments in BI analytics. We saw this industry as really at the forefront in many ways for investing in those assets from other studies that we've done. So it has been significant. So the last area that we wanted to touch upon as part of today's webinar was to look at the customers in this space overall, and then look at the dynamics for the differences between them. Because from a IT vendor perspective, going in, targeting these firms, a lot of the analysis so far has been across the board. But as we look within the differences for these customer categories, from a budgeting perspective, from a decision-making perspective, from a priority perspective, it's definitely not a homogeneous market. So we've segmented it, and we'll call out some of the differences between them. So start by orienting you to this chart. So on the vertical axis, we've plotted out their aggressiveness. So we've, as part of the survey, as part of the interviews, queried them about their own perceptions for how aggressive they are, how early on the adoption curve are they for implementing new technologies, and how quickly they're able to do that within their organization. And then going off through the horizontal axis, asking about who's involved with making decisions, how centralized is it, how many decision-making departments are there, and how distributed the input process is as part of that overall process to understand the number of influence points and the targets in terms of selling into these organizations. So what we found was a heavy emphasis or weighting for within financial services on this empowered persona. So these are groups of customers that are both self-identified as aggressive IT adopters, but also that the decisions are highly distributed across IT and lines of business. So there's multiple purchase points, multiple influence points within these organizations that have decision-making power, as well as they continue to execute very aggressively on an IT roadmap. The other large category that we saw was in this bureaucrat persona. So these are folks that are both self-identified late adopters of technology, as well as have a very highly centralized decision-making process. So these are decisions that many times are made at the C-level, at the board level, not a lot of independent purchasing or participation for these customers, and so it leads to really highly concentrated decision-making power at the highest levels of the organization. So although they're quite different in terms of their behavior and adoption of IT, you can see that from a budgeting standpoint, they're actually very similar in terms of the average IT budget within these categories. And that's true of some of the other categories as well, with the exception of the laissez-faire, who have highly distributed purchasing but are fairly late adopters with 3 million. So that's a very small segment of the population, not something to lend too much weight, but certainly we saw most of those customers in the empowered segment. So when we dug below the personas and looked at how these decisions were actually made, we saw this fairly common process that for the empowered users, this is really representative of them, being 75% of the overall market. Most of the evaluation and the initial steps are driven by the line IT employees, LOB end users working together in conjunction with the management layer to go through a lot of the evaluation, the problem identification, and go through all of the baseline steps for establishing the business case. So involvement on both the IT and business side, we actually saw quite commonly brought up that through these formal review meetings, you see it called out in terms of both the boxes on the right, that a lot of times it's fairly structured in terms of how they're evaluating different needs and priorities, and that it changes on a fairly regular basis. And part of that is we've seen, due to the strong dependency on the overall economic environment, these are meetings that are taking place multiple times throughout the month, at least on a monthly basis, so that the roadmap is and the spending timelines are evolving in line with that. Whether it's the highly empowered or the bureaucrat, for most of the larger purchases, those things that are not, that go beyond the fixed investment, the run the bank investment, there was an approval process for the C-level and the finance teams. However, for those empowered, we see 75–80% of the road work really done at the lower levels of the organization, so that those are really the key influence points. Those are the folks that are going to be swayed by the proofs of concept, things that accelerate, get them bought in around the technology so that they can go forward and get that final approval. So in summary, when we look across the financial services organizations, we see an environment in which there's expected growth. They see IT as a key part of their core value proposition. So it is something that isn't just a baseline or a requirement. It's something that they're looking to in order to differentiate themselves going forward, to bring them closer to customers, and that from an IT adoption perspective, this is a segment that's more aggressive than other verticals that we've seen, but the requirement from the vendor side is to get buy-in from what is a fairly fragmented group of influencers that can be on both the IT and business side as you look at how IT is planned to be used as part of their overall business strategy. So a fairly fragmented, complicated, yet lucrative area for both in terms of a size and speed of adoption perspective. With that, I'll hand it back over to Allison. We'll open up for questions.
Great, thanks. We had a couple questions come through from the audience. I encourage anyone who has any additional questions to send in them now. We actually have a question on a specific slide, Alan, so let me take everyone back to slide 11 real quick. And the question that came through was, on slide 11, you listed the spending per technology category. Did you get any sense on if cloud technology hosted versus licensed from run at the bank is changing IT spending plans?
Yeah, absolutely. So we did get, as part of the broader study, so you can see the categories laid up on the slide here. The other thing that we did was, in addition to the dollars of investment, we did cover the delivery mechanism. So both from a hardware architecture standpoint, it was one of the key objectives of the study to go out and look at things like x86 versus Spark versus Atom, Alpha, Power on-premise, as well as put that in the context of other alternative delivery methods. So we did see cloud come up. You saw it highlighted in some of the quotes, as well as we've added a quantitative component to understand for future projects going forward what delivery methods are being evaluated. And we did that by the different workloads. So I'm looking at one of them now. It looks like traditional on-prem continues to be one of the predominant delivery methods. So that's fairly consistent across workloads. But that private cloud as well as public cloud came up in terms of the second and third priorities. So we do see increased evaluation going forward for, we've seen a lot of public cloud investment to date. Really see private cloud emerging as an alternative to traditional on-premise delivery for some of these workloads, a lot of which are, subject to stringent security and compliance concerns, making private cloud a better fit, and we see increased evaluation going forward.
Okay. Next one, Alan. How do you see these trends vary by geo, North America, EMEA, APJ, LATAM, and are the numbers presented globally or only for North America financial services firms?
So we fully expect to see differences by geo, particularly as you look at environments like EMEA and Asia Pacific for the banking industry. We talk about, this is just for North America, by the way. We have not conducted the research in EMEA and Asia Pacific, although it is on our roadmap for the remainder of this year. So I think that the findings would change dramatically as, particularly if you look at the importance of the economic environment as it plays into banking business and IT spending priorities. So in that light, we think that the insights in terms of how those different economic environments in Europe and in Asia would impact it would have a profound effect on both the workloads that are being prioritized, the levels of spending, the change. We really do see a lot of value in terms of doing this globally going forward.
Okay. We have something similar. The next question, were these breakdowns you shared of workload priorities a wish list of sorts or actual spending estimates?
So we did both. So we shared one of the priority pie charts, didn't have any dollars on it. So we did ask people, budget aside, what are their top priorities so that we could get a, that wish list view. But we also then complemented that with actual spending levels and planned increases for 2013 and 2014. So we do have both views as part of the research.
Okay. How did compliance fit into respondents' purchasing decisions?
Absolutely. So when we looked at compliance, so we asked people about the key external factors, key internal factors. So where compliance fit in was in regards to the internal IT areas of priority. We saw it as second to security in terms of being a first rank. So it's right up there in terms of those baseline for the IT side. They're really tasked with implementing a lot of that for the overall organization. So we saw it as a top, we did see it as a top priority, and even above, when we looked at the overall areas of internal drivers, closely followed by things like internal efficiency, cost reduction. So certainly it came out above those. That's the reflection of the baseline for operating in this space. They need to meet those compliance concerns, but closely following that is increasing the efficiency, really minimizing the levels of investment that go into that as much as possible so that they can focus on those things that actually impact the business from an external customer perspective.
Okay, we have time for maybe one more question, maybe two. So if there are questions out there, send them through now so we can actually capture them. How often did you see firms using services for their workloads or projects?
Yeah, absolutely. So I mentioned the delivery method for the different workloads and projects. The other perspective that we looked at as part of that was what professional services, what are the primary categories that are used for each workload, as well as, what's the incidence rate for customers that are actually using them versus using internal labor or building those skills internally. And so we found across most workloads, it does vary. However, a majority of customers in the space are using professional services. It's what drives that category of spending to be one of the largest as you look at splitting up the different levels of investment. So really a majority of customers here have built up a proficiency in terms of using external services to provide both IT as well as business guidance for how to integrate the IT investments that they're making to provide those financial and business impacts that they're really looking to achieve.
Okay, looks like we're out of time, so I apologize to those folks out there that have sent questions through. We'll be following up with you directly to answer those questions. I wanted to wrap up today. As I promised, I wanted to share with you all of the social media links that are listed here. So I encourage you to follow both Alan as well as TBR on Twitter at the handles listed here. As well, if you found interest in this topic, we do actually have other webinars on other topics that are part of our SourceIT research program. Public sector, telecom, and healthcare was all done the last 2 weeks, as well as retail was done earlier this winter. So you can find all of those webinars on YouTube if you'd like to watch those. As we mentioned, this is a high-level view of a much deeper piece of research. So if there's interest in getting access to this, we do encourage you to follow up either with Alan, myself, or with any of your account executives here at TBR. We really enjoyed your time today, and thank you for spending the afternoon with us. As you're leaving the webinar, there are it's a quick survey that we'd like you to fill out, asking how good was the presenter, how good was the presentation, and if there's any other open comments that you can provide us in terms of things you'd like to see in our research. Just give us some guidance on additional information that you'd like to be able to get access to. It'd be very helpful. We'll be using that to improve our research quarter to quarter. Again, we encourage you to follow us and join the conversation on our social media links, and we look forward to speaking with you all again soon. Have a great afternoon, everyone.